what is the best way to trade the British pound GBPUSD as we head into next week's FOMC? What are some key levels to watch? And what is the overall structure of the chart telling us going all the way back to 2022? That's what I'm going to have for you in today's video. We're also going to take a look at the US dollar index, the DXY, and I can assure you guys that you're not going to want to miss this video. I'm going to do things a little bit differently this time, but the structure I'm about to show you though is something that you are going to want to watch for the pound. All right, so be sure to watch this video in its entirety because it's going to be crucial for GBP. Okay, looking at the GBPUSD daily time frame going all the way back here to late 2022. So I don't care if you're a daily time frame swing trader like myself, or if you trade, the 1 hour time frame or even the 15-minute time frame, this is going to matter for you because even if you trade the lower time frames, what I'm about to show you might not present a trade opportunity per se, but it's going to help you identify the overall structure of the chart and also the trends. All right, so today's going to be a little bit different, guys. Typically, I show you the levels on my chart. We're going to walk through this with a blank chart. So let me know in the comments whether you like this format or you like when I just kind of show you the levels and talk through it. So looking here at GBPUSD, a lot of people love trend lines, right? The issue with trend lines, though, is that when you get in a situation like this, if you're trying to identify a trend line going all the way back here toward the 2022 lows, or even these lows here in 2023, it can be really difficult because, you had some trend lines back here in this area, right, when the market was breaking down. But as of right now, there really isn't a whole lot. I mean, you could draw a level off of this low down here toward these lows, but again, there's really nothing immediate here for the pound. So this is where I love channels, equidistant channels, because markets love symmetry. And once you understand that, everything starts to fall into place. So looking at these two highs, this one from December 2022, this one from July 2023, these two highs up here were very prominent because the market took months to take out this high back here. And up here, obviously, the market has not taken out that high. So these are both very prominent levels here or highs on GBPUSD. So if we take this area up here, I'm going to turn on the anchor tool, which is, a godsend if you trade or if you use TradingView. And if we take these two highs up here, draw a level across this, I'm using the equidistant channel tool, and we just do something like this here, okay, and drag this level down to this low from right back here. What you're going to immediately notice is that we have the low here, okay, which is fine. However, we don't really have a whole lot in this area. But look right here before the breakdown. Notice how the pound found support right through here. Now, you might be seeing where I'm going with this, where if we take this level down here and extend it all the way up here, all right, notice where the pound is having trouble recently. Okay, so this was a channel breakdown. You can see, again, here's our lows right here. You can see where the market found support here for about a week because this is the daily time frame. We got the breakdown through here, and this entire price action through this area has just been one big rounded retest following that breakdown last year. Okay, now I discussed something very similar on the Euro USD chart yesterday, so be sure to check out that video. Okay, so this is the very first thing to consider about the pound is that it is finding resistance here at the bottom of this channel. However, this is not an immediate short just because the market has been sideways ever since back here in December. Now, furthermore, when you look at the highs and lows, we don't have a trend reversal just yet. Okay, so let me show you this, and then I'm going to show you a second channel that you're going to want to have on your chart. It's another one that you do not want to miss out on, all right? So stick around. But looking here at the recent trend, let's talk about what it's going to take for the pound to break out of this next week, because we do have FOMC coming up on Wednesday. And simply put, when you're looking at a trend like this, it boils down to the highs and lows. That is it, right? That's all that matters here. So when you start to analyze a market, right, these are equal lows through here. Okay, this was not a lower low technically because we didn't have a close below this one back here. And so far, the pound has been making higher highs and higher lows, right? That's easy enough to see. Now here recently, we do have some lower highs. However, we don't have a lower low because the market hasn't taken out this area down here just above 1.26. Okay, so that's going to be a critical factor as we head into next week's FOMC because it is going to take a sustained break below these lows right back here. Once again, turning on the anchor tool here in TradingView to target the very bottom of that wick. Okay, so looking here, this level at 1.2612 specifically, this is going to be critical. We would need to see the pound taking this out, closing down here a sustained break below this to give us that first lower low and confirm the reversal, because so far we've had lower highs. We need lower lows to go with that in order to confirm a trend reversal. So that's the very first thing to keep in mind, is that even though we are seeing the pound retest the bottom of this channel, and you could say, well, this looks pretty bearish, I'm going to short up here, just be aware that right now the market is just sideways and we do not have a confirmed trend reversal here. We would need to see that sustained break below 1.2612 next week. Now, obviously, if we get the market moving above this area up here, right, taking out a trend line like this up here, taking out these highs and closing up here, then that would start to negate the idea that we're going to get a trend reversal, and it could push this market right back up here toward this area. Okay, so there's really nothing confirmed here, but I did want to show you this because it's incredibly important. Now let's talk about that second channel. That is another one that you are going to want to watch. Okay, so keeping in mind that markets love symmetry, what is the next channel on this chart? Now, here's where some people might go a little bit, I don't want to say wrong, but they start to draw trend lines like this here. Now, that's not technically incorrect, because you can see that right now the market is finding resistance through this area. However, what I would say is that this is incomplete. And what's going to take your trading to the next level is to start using channels more often where they make sense. And so you can see where if we take a channel, okay, take the channel tool here, parallel channel, draw again from this high up here, down here across these highs, right? So it's essentially a trend line right now. Take this, drag it down. This is an equidistant channel connected with these two lows. And all of a sudden you have a lot more structure to this market. Okay, so what's happened here is we had an uptrend back here for the pound. We had the breakdown back here. We've gotten the rounded retest now on 3 separate occasions. The pound has gone sideways, and now we have a potential lower high developing. Okay, a more macro lower high developing, and we also have these lower lows back here. Okay, so you kind of get the sense of where I'm going with this here for the pound over the coming weeks. Now, next week's FOMC is going to be key though, guys. Again, we don't have a confirmed reversal. We need something below that 1.2612 level. If we start to see this market take out these highs up here and close up here in this region, then the uptrend is intact, and any kind of idea of shorting this market, in my opinion, would be ill-advised. All right, now keeping 1.2612 in mind, let's take a look at the US dollar index. I'm going to show you how to use this for some confluence here when you're trading the pound. And if you guys are enjoying this video, be sure to smash the like button and also subscribe to the channel so you don't miss out. I am putting out a Saturday forecast tomorrow on 5 different markets. Okay, so be sure to subscribe to the channel so you don't miss out. Now, looking at the DXY, this moves mostly inversely to the pound. Now, a lot of people say, why do you look at the DXY when you're trading GBPUSD? Because it only makes up, GBP only makes up 12% of the DXY, right? So it's not a huge percentage as far as weighting goes, but if you look at the DXY and compare it to the pound, so what I've done here is in blue, this is an inverted DXY. Orange is the pound. What you're going to notice is that they move almost perfectly together. Sure, there are some deviations along the way, but look at this recently, right? I mean, yeah, there's little moments like this here where you get the markets moving apart from each other, where you get those performance gaps. But for the most part, though, I mean, these two are incredibly aligned, right? So again, I've inverted the DXY, shown it against the pound, so they move together. So what that means is that GBPUSD moves inversely to the DXY. So looking at the DXY, this is what we've talked about now for really the past week, is 103.50. 103.50 is an incredibly significant area, guys. I can't stress that enough. If we look here at the 12-month time frame, so every candle on here is 1 year. Going back to 2016, 103.50 has been incredibly significant. We've got the high from back here in 2016. We've got the closing price from 2022, and so far the DXY has been unable to break above that. Okay, so this is going to be a critical factor for the DXY going into next week's FOMC. And this goes back to the pound, right? If we're going to see this market break below a level like 1.2612, then the DXY needs to break above 103.50, right? Remember, these are inversely correlated, so we would have to get a sustained break on the daily time frame above this area. Yesterday tried again, but failed. Okay, so 103.50, this area through here, and 104.20, this one right back here. Remember, highs and lows. Okay, so far we've seen lower highs and lower lows for the DXY going back to October. So what's it going to take to reverse this, right? If you said 104.20, then you're right. And if you've seen recent videos, then you also know that's where I was going with that. So 104.20 is going to be an area that bulls have to take out in order to reverse this trend. Okay, so what we can boil this down to is 103.50, 104.20. This entire area up here is what the DXY has to take out over the coming days in order to force the pound lower below this area down here and really confirm that we are likely to see a trend reversal and a potential completion of what we've seen here for the past year plus. Okay, and alternatively, if we see the DXY breaking below this area down here following next week's FOMC, 102.60, this is going to be a must hold now, in my opinion. If we see it breaking below this trend line and also breaking below 102.60, something like this trading down here, I think that would start to look kind of bearish for this market, because it would show that it couldn't hold a level as significant as 102.60 after closing above it. Okay, so that would be the bearish scenario for the dollar, the bullish scenario for the pound, if we see the DXY below 102.60 on a daily closing basis. And that would likely force the pound above this level up here and also these highs. Okay, so again, the bullish scenario here, because nobody knows which way this market's going to go, the bullish scenario here is if we get that sustained break up here. And the bearish scenario is a sustained break below 1.2612. All right, so if we kind of round this out now and talk about some key levels here, if we do get the breakdown, because that is kind of the way that I'm leaning right now, given the look of this chart here, given the fact that the market is coming off of the bottom of this channel up here and starting to carve some lower highs. I do like the idea of a move lower, but again, we need that confirmation. So looking here, this is how I identify key levels, and there's really no magic to it. It's just going to the daily and even weekly chart sometimes and watching to see how the market reacts around certain areas. So right through here, you can see that there is a pivot right around 1.25. Okay, so this area through here would kind of be the first one that I would watch. So these lows right through here, that's going to be support below 1.2612. Okay, now below that, you can see this high right here and these lows. So that would be a second one. And what I like to do as well is once you find a little pivot like this, what you can do is take this level and hold down shift and drag it over and see if it lines up with anything else. And sure enough, you can see that these lows right through here line up right there with that level. All right, so it gives you a little bit more confidence in looking for support down here at 1.2375. And you could do the same thing with this level up here as well, is just hold down the shift key if you're here on TradingView and drag it over. So you can see it kind of cuts through this candle back here, so I don't really like that as much. Really, this is just a pivot ever since this high from back here on November 14th. All right, and then below that, we've got this low down here, which I would probably mark out just because it is a significant swing low, and you can do the same exact thing, right? Drag it over, see if it lines up with anything. We've got this high from right back here. So to make this one a little bit more conservative, I would probably draw it like that off of this high. And then, of course, we have the lows from back here. Now, you can see that this low right here, if you draw it from the low, this one doesn't match up. So what I would do in this case is draw it from the closing price right back here so that you get a little bit more confluence with that level so that it's not just this low down here matching up, but we've also got this low through here and also this wick. All right, so one last thing that I want to show you here, and again, incredibly significant going into next week with FOMC, because this is going to give you a potential early opportunity to get short. If that's the move we get, guys, there's still a big if. We don't know which way this market's going to go. But given the fact that markets love symmetry like we've talked about, okay, if we take a look at this level up here, remember that this level is the bottom of that channel. Okay, so it's an incredibly significant level. And if we take a trend line, okay, and draw it along this same level, okay, now what I'm going to do is I'm going to take this level. You can see that matches up pretty well, right? I'm going to take this level now and drag it without grabbing on hold of the end so that it keeps it parallel with the bottom of that channel. And what you're going to notice is that right across here, right across these lows, okay, pretty much from this closing price right back here, we've got this low and we've got this one. So this is also going to be a level to watch because we have an equidistant channel now, an ascending level or ascending channel to keep an eye on for next week. So this level through here could be an early opportunity to look for shorts following FOMC. As I always say, guys, you don't want to trade events like FOMC. I think that that's gambling. So this is a case, this entire video, guys, is a case of trading after FOMC. You don't want to trade before, you don't want to trade during. This is an aftermath type of trade idea, right? Where Wednesday comes and we either see a close up here or we get a close down here, preferably down here below these lows. Okay, but I do think though that something like this trend line here that runs parallel to that one that goes all the way back here to these lows that we talked about, right? This is going to be one to watch as well. So it could give you that extra little edge when you're trading the pound after FOMC. Again, after FOMC is the big key here. Just because of the volatility that we tend to get from FOMC, you don't want to be trading before that or during the event, because chances are, even if you get the direction correct, even if the pound is going to break lower, chances are, if it's trading through here going into FOMC, chances are we get a move up here first and then the move lower. Same thing if we get the move higher first. We typically get a move lower first and then a move higher. So if you're trading this before FOMC, there's a good chance you're going to get stopped out prematurely. So do yourself a favor, wait until after the event before you start looking for trade opportunities. All right, that's it for today's video. Be sure to smash the like button and subscribe to the channel and click the bell icon for notifications. And do me a favor too, grab the 70% off VIP access using the link in the description below. You're going to get daily videos, exclusive charts, and you'll be able to see my trades in real time, plus the course that comes out within the next few days. Trade well out there, and I will talk to you again tomorrow in the weekly forecast.